All right, traders, welcome to the end of week market recap. This is Christian from Hertz Trade Group, and it is Friday, January 27th, and the market just closed about an hour ago. Theme of the day, well, risk disclaimer first before I go over the themes and some market thoughts as we wind up another big week for equities. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the full risk disclaimer right there. So yes, theme of the day, and then we'll kind of talk a little bit about the overall week, but a lot of momentum in the growth names today. Really hot, and even some of the biggest underperformers that we saw in 2022, those really kind of some of them just went ballistic is the adjective that I'll use to the upside. So and again, I could go through charts, many charts for those, but a CoinDesk was up huge. There was this big squeeze that went on in and a couple of the EV plays, both Lucid and Rivian. Well, Lucid was really the monster move. Anything AI, that's how we kind of started the day. We've heard a lot about this Chat GPT shaking things up, and there's been some investment in that from different companies. But it also seemed like anything with that was involved or that is involved with artificial intelligence was really kind of the theme. Besides the heavy growth and shorts, a lot of short squeezes that happened today and also throughout the week. The theme that I would say early on was just anything artificial intelligence related. There are a couple ETFs that are out there, by the way, if you're looking for or to get involved in that space a little bit more. There's always been robotics ETFs. Some of them are called robotics and AI. I think there's only one out there that's just strictly AI from what I know anyway, and that's ROBT. All right, and it's an interesting ETF, but like one name that went crazy today was AI, which we've seen call buying in that name a few times. So I'll bring up the chart and that name in just a second. But I also just wanted to be, besides looking at the performance that we see for the day, and also if you want to look over here to look at the on the right side of your screen to see the performance so far. I mean, we only have two more believe it or not, we only have two more trading days of January, right? And then it's on to February, and it's kind of interesting the way things line up. I think they from a risk perspective, right? Some people like to take off a lot of positions at, like, once the month ends. Well, you've got a pretty good excuse to do that this month because the Fed meeting is the first of the month. I have seen these last couple of Fed meetings that are really difficult to trade that day. A lot of fake outs, whippy price action. So I think it's a great excuse to basically have the first of the month and say, hey, I'm going to lock in, positions or your performance for the month, unwind some trades on the 31st or even now on a Friday, and wait to kind of see what some of these big names are going to report for earnings, because even though this was a huge week for earnings, Microsoft, Tesla, obviously Intel, and a couple of the semis didn't do too well last night after post earnings, but there's been a number of other names that reported. The American Express and Visa. I mean, I can't believe the move in American Express today, which I'll try to get to too in this video, but so besides all those names and that reported in some of the themes that we're seeing play out in the steel names, and in some of those credit card companies, we've got big names like still ahead, Google, Apple, Amazon, and I think I'm forgetting Meta's in there as well. So you've got some of the real big companies reporting next week, along with the Fed decision. So if you're looking to take a breather, I can't think of a better excuse than to kind of look at the move that we've seen this week. The Qs were up 4.8% for the week. The ARK Innovation ETF was up 10% this week. That's now up 29% year to date. It's just really funny too when I look at some of those numbers on the right side of your screen. And you heard, coming into this year, what did we hear? What was the popular consensus that we heard? Was that the first half of the year is going to be bad, the second half of the year is going to be better, right? And how dead wrong has that been, right? With the Qs up 11% in less than 1 month. We've also heard about, which again I've been behind too, value outperforming growth, because that was a huge theme of 2022. Look at the difference between the growth ETF and the value ETF, up 10.6% year to date is growth versus value 2.3. So again, so why do I bring these things up? Because you can listen to financial media and you can listen to different broker reports, but really, and again, I hate to say this, but being in front of the screens and watching the price action develop for yourself and being objective, right? Not having those anchored beliefs that this is supposed to happen, right? I get into, well, I don't get into arguments on Twitter because it's a waste of time, but I do, go through Twitter, and I just can't believe some of the reluctance of people to change their views. And, it to me, and I've seen this, I've been trading for a long time. I've adopted over the years a trend following philosophy. Why have I done that? Because if you're following the price and trend, right, you can kind of weed out some of these opinions that are in the market, because these opinions are often wrong. And I always find it interesting that people will just stay anchored to what they think. They won't adjust to how the market is changing. They will continuously argue with the market and think that the market is wrong because they have to be right. Right? That is a big no-no in trading. So you could watch some of these fools on Twitter, try to come up with any type of stat that they can possibly find that will still back up some type of a bearish thesis. Now, again, could things definitely change next week? Absolutely. And that's why, I go back to what I said 2 minutes ago about, hey, this is a great excuse to take some profits. I always go back to, so, that's the one thing that I find, particularly interesting, is that all of these consensus ideas going into the year have been mostly wrong. Number two, a lot of, so that's one of the things that I've learned, from trading for a long time. Secondly, too, is one of the sayings that you hear on Wall Street a lot, which I agree with this one, is that buy the rumor, sell the news. Now, of course, that's not the situation in every situation. I mean, look at what Tesla did today after earnings, right? They had a huge week this week, and they rallied after earnings. So that was more of a situation where I think people really got caught off guard. Big short interest, when things go better than expected, shorts are going to be forced to cover, and it can get quite violent, as we saw with Twitter feeds and with the price action, is with both of those. But buy the rumor, sell the news. If you're looking to kind of game or think about what the Fed is going to do, right, and try to figure out that puzzle of what Powell is going to come out and say and whether or not they're going to be more dovish, there's easier things. It's much easier to look at this price action that we've seen this week, take some profits after the growth ETF is up 10%. You have to be asking yourself, what else are you looking for in 1 month, right? So my one of the points that I wanted to make in this video is pace yourself, right? And it's impossible to hit every trade. I certainly, didn't come into this year thinking it was going to be growth, was going to be an outperformer like this. But pace yourself, realize that it's only 1 month of the year. So regardless of how you did, having a huge month or not having a great month, right? It's the very beginning of the year, and you have to think about each month as a separate, as a completely separate. Like I think of it as like almost like an NFL season, right? And I always use the always use the analogy of Bill Belichick, right? He always talks whenever they ask him in an interview, like when it's in the beginning of the season, hey, do you think you're going to make it to the playoffs? Well, his answer is always, we're going to concentrate on the next week's opponent, right? So that's the way that you kind of have to think about it, regardless of if you did very well in January or if you didn't. You still have to think about what you're going to get done in what come February. And for me, that's really reducing risk going into the Fed meeting, and we'll wait and see what they kind of say, because that may set up a whole nother group of trades. What I thought, let me just touch upon a couple things with today's price action, right? So I mentioned AXP. I'll kind of start with that one because that one I know not too many people probably talking about what happened to American Express, but this is again one of those situations where everybody thinking that the consumer is doing really poorly. And what I've been urging, Tribeca Trade Group members to do, as well as, just traders in general, is to go outside and experience, right? What is it telling you when you go to a restaurant? What is it telling you when you go to the airport? Have you been to a hotel recently, right? I know I have. And again, I'm in New York City. You could see outside the screen, that's the East River. That's Brooklyn behind me. This is lower Manhattan, but I know that things are packed. It's very difficult to get a reservation. So again, I know that New York is not the whole country. It's a little bit of a bubble, but I have been to some other areas around the country, and things are not as doom and gloom as what some people are saying in 4-hour Twitter spaces, right? That's probably one of the worst things that you could do, is listen to these Twitter spaces for 4 hours and listen to either, bulls go on for 4 hours or bears go on, because that's brainwashing, right? That's not really good analysis. It's better analysis to be objective, right? And, not take people's word for it. So I think this is a product of just expectations were really low, considering how much people have been traveling and so on and so forth. So we nailed this trade. This was something, actually, I did not have this on for an earnings trade, but I sent this out a couple of days ago. So I just wanted to urge you to make sure that you're subscribed to my Substack. It's free for now, so you could kind of take a look at what I'm sending out on a day-to-day basis. But I put this out just 2 days ago when I was noticing what was going on with Capital One, Discovery, all having the same patterns of just the stocks are beaten up. The expectations were low. Credit, reserves and those types of things were priced in to the stock prices, right? Charge-offs and things like that, right? Already priced into the stock, right? And Visa had a nice day today. I think this is a good-looking chart for the long term. That chart hasn't been updated, and this is what I was looking at for AXP, which I did stick in the TTG trend portfolio, right? I did start a trade, and I didn't want to hold it through earnings, but I did put the trade on in the TTG trend portfolio. So nice performance there. So that was one thing that I wanted to discuss. I mentioned I would talk a little bit about the move in the move in some of these AI companies, but here's this one just about filling the earnings gap. So this is an interesting one for momentum. I think also Nvidia is a great play for this theme, right? And there's a lot of different names, and I think at this point, even this name kind of pulling back a little bit and backing and filling. So really, that's kind of what I'm looking at for next week, is if we do get some volatility, whether it be from, more earnings reports or from the Fed meeting, I think there's going to be plenty of opportunities because some names are a little bit extended here. Also, one of the things too that I wanted to bring up was, we've really seen some of these value areas, in terms of, like the consumer staples, and, we've seen a rotation, and look at what's happening in crude here. Now, again, this is just one red candle, but I would watch to see if this starts breaking the 50-day moving average back below. I was actually, I didn't get every trade right this week, certainly. I thought energy names might actually really kind of move to the upside, but they were today's underperformers. Now, there's nothing wrong with this chart yet, but I would just keep an eye on what oil and nat gas has been really moving to the downside. A lot of people are talking about a possible rebound in this, but I don't think unless we get this above the 5-period moving average, that's when I would look to kind of counter that. But I would just be mindful because if you look at some of the other the other value type places in the market. Consumer staples, we've called this one a few weeks ago that it looked really weak. I also mentioned healthcare, right, has also been trending lower, right? A defensive area of the market trending below the 50-day moving average. So these names these groups have lost the upside momentum that they saw in 2022. And I would be very mindful because I think people are still in a lot of energy right now. So that's just kind of a quick takeaway from the week. Other than that, here's the weekly performance, right? Again, consumer discretionary had a huge week. Clean energy, retail had a big week. The semis, even despite Intel, which has been a serial underperformer. Again, I already gave a little bit of a talk about that name earlier this morning, but it just goes to show you sometimes, I think a lot of traders learned a lesson from 2022 that basically was, hey, it may not be the best thing to just buy a name just because it's down, right? I would second that with Intel. Right, they have, them going down is not a buying opportunity, in my opinion. It shows how weak their business is relative to the rest of the industry, right? They're now behind AMD and Nvidia and many other, niche companies that are out there in the semis. They're just behind that group, right? And that's because of management. All right, so that's not, to me, it's not a buying opportunity to see a name get hit that hard on earnings. It tells you something that they're not executing where other companies are. So SMH up 5% for the week. Aerospace and defense had a pretty good week too, up 4%. I still like that group a lot. I was looking at Flex, which I know is more of like a value type tech name, but they're involved in the aerospace name. They had good earnings. They're just sitting back, right? And I think that's the case for a lot of the healthcare and biotech names. Like Sarepta was a name that I was watching kind of coming into this week for SRPT. Yeah, I mean, it's just kind of sitting at the 50-day moving average. So it might be a good entry point. Somebody was talking about this name too this week, right? Which is Target Hospitality. Let these names kind of come in a little bit, and perhaps if there's a little bit of volatility on the tape, they may begin to outperform a little bit. So it's good to have setups in both areas, and we'll see what the Fed says next week. And by the way, and here's what, I bring this up a couple times during the week in these end of day videos, but 25 basis points is what the Fed is looking for, or is what is being priced, right? We had economics today, which I said in yesterday's video that it could come into play here if the numbers were much different than consensus or the survey. They were not. My PCE deflator came in 0.1 versus 0. So, that's a fresh gauge of inflation. We won't get the next CPI report till mid-month in February. But again, this is a matter of time, right? There's a lot of things that I continue to hear that are wrong on financial media, right? The way from my standpoint, the way that the Fed looks at what happened here. Oh, I need to put this in here. 217. Let's put this or put 228. Right? People talk about, well, the inflation will never get back to 2%. Well, which inflation? If you're talking about the change over change year, that will happen as long as sorry, let me make sure I'm saying that correctly, right? That will happen as long as the continuation of what we're seeing in inflation is around 0.0, 0.1, right? So again, I've talked about this quite a bit, right? But when you look at the month changes, right? These months have to roll off, right? I'm looking at June, May in here, right? This is once we get to July, right? We'll be looking at all of these months will have rolled off, right? So again, the way that they are measuring it, as far as I can tell, is the change, not the overall level of inflation rate. So, so we will get to 2% inflation, provided that we continue to come up with these readings that are around 0% for the next couple of months. It's going to happen, right? Again, as long as that it continues, right? And it makes me a little bit more confident to see the PCE deflator come in at 0.1. So, and we'll see, and if I have that wrong, maybe Powell will correct me on Wednesday, but to me, it's a matter of time. When these months roll off, And then if you're looking at the year over year number, right? Well, you don't have those numbers affecting it anymore. It'll be these numbers, right? Plus the future months. All right. So again, I try to point that out because I keep hearing, I heard somebody this morning talk about it. Inflation will never get back to 2%. Well, which inflation? If you're talking about the change year over year, it will get there, provided that the remaining months up until July are around flattish. All right. So that's what we have. I was going to mention just a couple quick other things here. Here's how our watch listed for the week. You know, of course, here's the Substack watch listed very well. I didn't take every one of these trades. I also wanted to talk about one other thing. Again, I'm trying to keep this video kind of short so that you can enjoy your weekend. But you know, if you held, you did very well. But I'll tell you what's been. I've talked about a lot of good things that were learned from 2022. You know, risk management, right? Understanding, you know, not messing with names and downtrends. However, you know, look at this square was up 10%. I traded this a couple times this week and made money on it, but I didn't make 10% on it. So, you know, names that really didn't do well in 2022, I don't have a comfort level to it's very hard for me to stay in trades in some of these names that just every time that they rallied a little bit in 2022, they stalled and they went the other way. So something that I have to get better at as a trader this year is kind of sticking with trades until they really give you a stop out. You know, a couple times, like I think one time this week, I stopped myself before it hit the stop that I set. So you know, if you're doing this too, listen, I don't blame you because growth was a recipe for disaster in 2022. And, you know, things flipped very quickly. You know, I did that. I tried, for the most part, I avoided growth names in 2022, but a couple times I tried trades. And when they didn't work, they really backed up quickly, right? I had tried Shopify in here once it got back above the 200-day moving average. And, you know, once it fell apart, it really fell apart again. So I remember, I think I stopped myself out when it went back below the 200-day moving average. But, you know, that was like a $3 or $4 ding on that position. So that's why it's so hard for me right now to say, okay, you know, now I'm going to commit like I did last time. And you know, you got to have a short-term memory a little bit for some things, you know, meaning if you got burned in a name, forget about it. It was in the past, right? Sometimes these names can really change personalities. All right. So that's it for today's video. Did I bring up the week's performance? I sent this out on Twitter, but that's the week's performance. Again, I look to be very light into next week. If I miss some plays for next week, that's fine. But I want to exercise that risk management. I think that we're overbought short term. And I think if the market goes down and Powell really doesn't change his tune that much, right? If they increase interest rates by 25 basis points and do one of these, you know, let's see, and the market sells off on that, it might be a really good buying opportunity because I really like some of the things that are doing well, like the steel names and you know, some of the other areas that we've already talked about. All right, guys, that's it. Have a great weekend. If you're not a member of Tribeca Trade Group, please check it out, tribecatradegroup.com. Again, I pride myself on being really in front of the pack in terms of coming up with ideas like the consumer credit names, you know, as well as some of the other, you know, I got a lot of heat about a month ago when I talked about consumer discretionary outside of Amazon and Tesla starting to look pretty good. A lot of people told me I was crazy, but I was right and they were wrong because consumer discretionary has done pretty well. So I like to be in front of the pack. I'll take the criticism. That's fine. But you can get half off your first month of the trading room at tribecatradegroup.com. Have a great weekend, everybody.